Good morning, everybody. I hope you enjoyed the full moon last night. For those of you who did not see it, that's not my fault. It's unfortunate that you don't take the 35 seconds out of your daily 24-hour life to go outside and enjoy one of nature's greatest spectacles. So here you are, waking up and wondering, what are we doing? What are we doing? Because futures are dead flat. So put your willy back in its pocket and, get back to understanding this is OPEX week. OPEX weeks are designed to absolutely annihilate the novice trader. So futures are flat. However, where did we go to yesterday? 59.27 on the ES. And we hit right into our Fibonacci cluster over on the SPX, right up there, 5,900, 5,910. And at the end of the day, had that sell off where your $3.30 went to a little bit better than 12. I'm not a mathematician. I'm a rocket scientist, so I'm not really good at saying they went a little bit greater than 300%. So what do? Well, we do what we always do. We analyze, and then we make decisions, because all that trading is analysis plus capital plus execution. It's not really rocket science, people. I had the news on. So, where are we? Well, giving you, again, your backtrack that we are on a fourth green weekly candle. As I said in the beginning, it's not illegal. You can have 4, you can have 5, you can have 6. Hell, we had 9. It's not illegal to have more than 3 green weekly candles. It's just something that you want to be paying very close attention to. But it was very ironic that we gapped up above the Trump versus Kamala Harris win at 57.83, which, if you refer back to the January 13th lows, as well as your March 25 highs, you're right there at that 57.83. We couldn't get to the 200-day moving average, so we gapped up above it. So again, on your analysis, I have absolutely nothing new that I can provide for you at all. I've got a little video at the end of this to give you an idea. Once again, over here, looking at a 5-day view. Back to Wednesday, 55.78.64. The big gap up over the weekend on who gives a shit China, which is all fluff and buff. And here we are, 59.06.64, where our highs were yesterday, and we closed at 58.86.55. What does it mean? Again, same comment. Gaps get filled. They always get filled, and we have filled every gap that we have up above. Bring you again onto what you missed last night. If you didn't go outside, you can catch the little mini version, but full moon coming in here today, and you are now up 22.16% over the course of the last, call it 90 days. Make your own decisions. Here you are on the QQQ, again, going back to April the 7th, or AKA roughly 28 or 25, 26 trading sessions. You're up 28.58% on the QQQ, and you have eclipsed everything that needed to be eclipsed after having struggled at the 200-day moving average 1, 2, 3 times right there at 493, 494, and the big gap up over the weekend. And once again, all gaps get filled. Here we are on the QQQ looking at it from a 5-day point of view. And again, didn't get down to 514, didn't get down to 513 on the little dip there after hours, or at the end of the day. And you are still green above where you closed at 2024, and you are still green above, well, fractionally above where the market is from the open for the year. We'll go over and look at that real quick, because we're going to be going on to spreadsheets. Because here we have nothing of significance, 2 green closes in a row. Nothing of significance. We closed the year down minus 0.28%, having broken above the 2024 open on the SPX. We're again in big bold green, greater than 10% year over year, something I'm paying attention to. We've got a 4.65% month for the month of May. We knew that May was going to be green before we even went into May because of having had 3 red months in a row. Our current range on the month, with these 3 green weekly candles coming into here, our range on the month, having made it through 1.5 weeks, call it almost 2 weeks today, 10 days, 328 points. So we're right there around the rough average. Over on the spreads, again, 2 plus 1% days in a row, Monday being easy because you gapped up above plus 1%. But there you are with your 59.15, 59.10, having made it up into the $182 range when we succumbed into that and closed out full credit. Your safer edge being up there at 59.20, 59.39 with the 59.25, 59.20, 59.30, 59.25s. Didn't give you a lot of credit, but you finished off full credit. And here on your QQQ, once again, closed green above the 2025 open over here at 515.59. So tried to say it 1,000 times, 1,025 times, 1,703 times. Everything is inside the QQQ. Everything is inside the QQQ. If you don't cheat on your wife, and you don't have pimpin' ain't easy, bunch of hoes that you got around you that you can go on to on Monday, Tuesday, Wednesday, Thursday, Friday, I see absolutely no reason for somebody who is not dedicated to this to be jumping around from one stock to another stock that they have absolutely no clue how that stock moves because they all move differently, and why you don't stick to the QQQ. I really don't care because it's not my responsibility. Your family's your responsibility, not mine. But it is my responsibility to smack you in the head and get you straight because you simply don't have, I'm going to say a lot of really bad shit. So I'll just cut it off from there. IWM, boom, 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 back into the 200s. Used to hate going below 200. Now it's loving being up here in the 200s. And again, 3 green weeks in a row coming into this. Again, not illegal, but here you are opening at 208.84 on the week, closing at 208.63 yesterday. So you are negative on the week as of right now. And as you can see here, 3 closes below the open. The weakness is starting to show. But there again, it is what it is. So I'm going to quickly glance over the charts because I want to finish you off here with the clarity, which I'm getting a lot of questions on. Over here on the DIA, coming off the April 7th bottom, still see this as a very, very weak 1, 2, 3 ABC, having gotten up to 420, failing these last 2 days. These last 2 days, the DIA didn't even know the stock market was open. Trading nowhere, 423, 421, nowhere whatsoever the last couple of days. IWM, a little bit better, but not great because, again, got out, as you saw there, Monday morning on this big gap up, big move up here towards that 211, 213, was able to get out of the IWM calls that I had, the 210 calls from way back a month ago, and able to get, unfortunately, only 42% on them. And I say that with no jest, but being very honest about it because, once again, come over here. We are up 21% on the SPX. We're up 28% on the QQQ. Why is the VIX hovering 18 plus? Why? Has anybody dared to ask that question to themselves? Why do we have an 18 VIX when the SPX is up 20% plus? Why? Why? This is the reason why you don't get worried about these things because you know that they're coming. Anyway, I'll go over this one in a little bit because we want to get over to the charts first and foremost to answer some questions. So, Netflix is a trade which is on, which actually I'll go on to that right now. Come up over here onto the IWM and come over here onto my trade sheet. And it was back after Trump because with the Trump-Kamala Harris thing and just the way things were really, really foobar, September and October and November, it just took a break. took a complete break. And then back here in the beginning of December, we started doing the 32 trades alert, revised it, because things were looking good. Things were looking nice. So we started on December 4th, traded the March 21. Now, again, this is December the 4th, and we're trading March 21. Time is your friend. Buying time is your friend. Further out dates. So December 4th, we started with the March 21 QQQ puts. Again, you got your 30%. Everybody got their 30%. They went 237%. The next time we traded it, once again, 316%. We traded it again, 291%. We traded them again, 346%. We traded these multiple times over the course of getting into that February 19th COVID 5-year anniversary market top before the bottom fell out. Collectively, perfectly timed, as if you were walking around a prison shower waiting for somebody to drop a bar of soap. 10,223% collectively. But that doesn't matter, because one of them, the March 21 JP Morgan 235 puts, they did not produce 100%. They did not. And I bring you back to that, which I pulled up on the screen already, which is this. This is the March 21 JP Morgan. I've got to get that on the screen so it fits, because it is too far over, and I'll make my adjustments. Whatever, it's not there. These are the March 21 JP Morgan 235 puts, and if for those of you who are here, you remember, I got into this before earnings, which was a big mistake. I do not like getting into stocks before earnings, but with JP Morgan, I was very, very confident, a little bit overconfident, and I held a big bag of shit. These 585 puts, $585 per contract, 585, they dropped all the way down to a quarter. All the way down to a quarter back here on February 20th. Looked like shit. Looked fucking, I'm dead. I'm dead on this. And then it all happened. And it happened 2 days before the expiration. I remember how excited I was when we were coming in here saying, I can get out of this at break even. I'm taking the fucking money because I want out of this JP Morgan. And here you go. You got almost 100%. Only 90+%, 95% on the trade. So that was the first 100 days. Come back on here onto March 17th, and the trade that I had opened back on March 7th on the April 17th QQQ 510 calls failed. Never, ever, ever worked. Never, ever worked. Never. I was trying to buy the dip a little bit too early. I completely made a big, huge mistake on the trade. The trade never, ever worked. So let's go on from there with how, again, March 13th, and I'm trading the September 19th QQQ 540 calls. That, again, was my mistake over here on the March 7th alert, was I got into a 1 month later expiration with the April 17th QQQ 510 calls. I should have been buying time, and I should have been buying myself a little bit more distance, same like I did here on March 13th. I got the September 19th QQQ 540 calls. I paid $8.08 each. They only went 105%. That's all that they did. Got into them again on March 18th, 820. They only went 102%. Traded a lot of these other things, the PLTR puts, the AMD puts, the McDonald's puts. Once again, going into the September 19th QQQ 525 calls on April the 1st. Market bottomed April the 7th. Here you are at 229%. But the point being, I've had two other trades. The May 16th IWM 210 calls, which I just got out of, only got me 42%. On April the 3rd, the big pop that we had on these June 20 Apple 225 calls, 68%. Again, because of how the pop was, that was all that I was looking for and all that I got, and that's the best that has provided on those Apple 225 calls. But again, you work yourself down. The May 9th, risky trade, May 9th, that I got into on April the 8th, the Amazon 200 calls. Very next day, they were 100%. You guys all exited the July 16th VIX 20 puts, plus 100% as of right now. The May 9th Apple trend line setup where you could get the put credit spread rather than playing the calls. 40 cents risk, 60 cents credit, 150%. So I've got 4 trades that are open. Got into the June 20 QQQ 500 puts yesterday, you already know about. The May 16th Netflix 1105 1100 call credit spread. Already paid on Monday when it dropped down to 1102. But I'm looking for this to close at the end of the week below 1100 so I can close this at a penny. So that's the intention. But this is what everybody wants to know about, is Boeing. And again, go over this. I entered the May 30th Boeing 180 puts at 303. I entered the June 20 Boeing 180 puts at 495. The reason I got into the 2 is because if the May 30s don't work out, I got the June 20s to sort me out.
You went full retard, man. Never go full retard.
And as I put into the email, with more time, July, August, there's a good chance that you could see that 164.46. It's exactly what the email was that went out to everybody. And the messages that I seem to be getting is that everybody's in the May 30th. Everybody's shoved themselves all into the May 30th. So we'll go over that in a minute. But here on Netflix, off of that 803, I see 19 waves to the upside. You had a nice big drop down there into that 1102. 1106 was your low yesterday, and here you are hovering just below 1140. Once again, I have no reason to change anything that I have on my view. I'm still looking for Netflix to get a little bit of an OPEX rollover and see something down below 1100. That's the reason why I got into a 400% trade with only $1 risk. So here on to Boeing. Boeing 185.71. 185.71. If you don't know what 185.71 is, then go out and draw on your chart. 185.71. It's the March 2017 high. 185.71. Where did it drop down to? Drop down to 128.88. The bottom is 126.31. You could go out there as far as you want, which we're going to in a minute, and you're going to see how that is the bottom. Now, I understand Donald Trump's president. I understand that. Donald Trump became president. Let me just zoom out here. Donald Trump became president back over here, back around 150. And as you can see, after Donald Trump became president, Boeing dropped down because Boeing is a piece of shit. And here you came right back up to this 185.71, and you had your major drop down. Back up to 185.71, major drop down. Back up to 185.71, where I stalked it for about 2 weeks, and that's what I wanted. That's what I got into the trade for. Now, let's look at this from a time frame point of view. And here we are looking at it from a 4-hour. Here's your 4-hour. This triggered me to getting into the trade right there. That sell divergence that I saw setting up on the 4-hour, hovering at my price pivot, which for better part of a year, and even going back further than a year, has been a major problem zone for Boeing. So I said, you know what, I'll get into the trade. But let's look at this from a different point of view and look at it from a 1 year. 1 year. And here we are. We were coming to overbought. We weren't yet overbought. And then right over here on May 8th, when I got into the trade, we got overbought. And what happened when you got overbought? Again, this is your daily. This isn't a 1 hour or 5 minute. This is your daily. And what happened when you got overbought? Right over here is where we got overbought going into the very end of December 2024. And we had our little dip. And where did our dip take us to? It took us right to that 165.46. Here we are again, nearing overbought, getting close to it. As we were peaking up here at 184.40 back on March 24, where the market topped, and then we had our sell-off well down below that 165.46, which it gapped below, to go down to that 128. And here we are on the daily with a 95.77 RSI. Well, let's look at this from a weekly point of view. Let's go out that way. And here we are on the weekly. And again, one of the reasons why I got into the trade was I could see this clear sell divergence right at the price pivot area, which was setting up on the weekly. And I said to myself, you know what? I'm getting into this trade because I like this. I have had experience with Boeing for better part of 10 years. 10 years I've had experience with Boeing. So I made a decision to get into the trade. And as you can see here on your 185.71, when you zoom out, you can see where it's been a problem. You can see where it's been fluff. You can see where it got boosted up above back here in 2024, where they thought, oh yeah, we're going to get everything. It's going to come back. And now we look at it from a wider point of view, being a 10-year weekly. And this is what Donald Trump did before, right over here. This is your bottom coming back in February of 2016. Here is your base right here at 126 to where Donald Trump becomes president. And Donald Trump took this from 126 all the way up to 446 before planes started falling out of the sky. And again, as you can see here very clearly, and we'll go on to a different chart here very soon. You can see here very clearly right in your middle area where this is the middle zone. This is the decision-making zone, this 185, this 200. Time to make a decision. Well, here we are, pretty much as overbought as you could ever want to be, and we're hitting right into it. So one more chart I've got for you here on Boeing, and again, time is your friend. That's the way it works. Coming off the 128.88 over here on March 7th, I can see this as a 1-2 with a very shallow 2. With an AB formation into the 1. And here we are putting in the wave 3 or wave C. Don't know what it is, but I can count 15 waves to the upside. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So again, with this being the old trend line back here from 2009, 2012 lows that were fractionally above at 196, the 23.6 retracement of this move being right here at 187 with 176 down below. My alarm is set here at 178, and the reason the alarm is set at 178 is because that's what I'm looking for. I'm looking for that drop down to 178. That's what I was looking for when I got into the trade. That was my expectation, as we are now above the 400-day, above the 100-day, above the 50-day, above the 200-day moving averages. So that's Boeing. That is your track record. Not that, this one. Coming on to here, 21 trades, 17 of them closed, 18 trades, 18 of them closed, and I'm not a rocket scientist, I'm only a mathematician, but 34 wins, 1 loss, that's 35 trades, it's a 97.14% win ratio. Enjoy your Wednesday.
It's good.